wish I got my own. Anywhere.
Thursday at 6:15 on Goliath Radio. Gwen Azama-Edwards, retired city clerk, former city commissioner, City of Daytona Beach. The Truth with Gwen Azama-Edwards on Goliath Radio.
Stan, you've been sitting much too long, much too long. Welcome, 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 welcome to Truth, a radio program designed with you in mind, a program whose sole purpose is to empower you, our listeners, for information leads to knowledge, and knowledge is, you got it, power. And as always, I want to empower you to take control of your life, those things that impact you, your family, and your community. As always, too, I want you to go to the website at www.gwen-truth.com so you can access that all powerful and empowering information. The links that will lead you to power. www.gwen-truth.com. Also go there so you can take part in the poll that I have, and it's asking the question about talk radio. Whether or not you feel that talk radio gives you sufficient information, gives you sufficient anything to help empower you. Shows like mine, those Big John and others in our area, do you feel that they help to empower you? So go to the website so you can take part in that poll, www.gwen-truth.com. As has been stated, I'm Gwen Azama-Edwards, former city commissioner, retired city clerk, City of Daytona Beach, author, minister, St. John Missionary Baptist Church Incorporated. Gotta say that for my hubby who's a pastor, and community volunteer. And shout out to all of our listeners. Thank you for what tonight actually marks 8 full years of broadcast here at WLE, 1380 AM, and just a great time, great experience. The end of December will be the last show. It has been a fun time, a great time, and I'm just so grateful for all of you who have remained loyal listeners, all of you who have had the opportunity and felt that the program has assisted you and helped to empower you and help you to take control of your life. That's what it's about. And the next season, I will inform you about that in a couple of shows to come, but in terms of what will follow, this show in terms of Gwen, Truth with Gwen Azama-Edwards. That's the new website name. So, www.gwen-truth.com. It has been a pleasure. It has been a joy. And one of the individuals who has come on the show kind of regularly over the years with James Moore and Company, Suzanne Forbes, CPA manager. I have had her on continually, usually toward the end of the year, and she is here tonight as our guest. And I have Suzanne on because of, number one, my love and great respect for her knowledge, her community involvement, just everything about this lady is what you would want to see in a person that you would model. Your behavior, your work ethic, everything about you after. I'm sorry, I have to say this, but and Suzanne and I really came to know each other when I was a city commissioner, and this was during the time that Yvonne Scarlett Golden was mayor. I was city commissioner. We had a few other people that were there, but we decided that we wanted to go with James Moore and Company because at the time they had women who were in leadership roles. Not only that, but as the mayor said at the time, not only are they in the leadership roles, but they are well qualified and they know their stuff. So they were hired to do the financial interactions and transactions, etc. Audits for the city of Daytona Beach. And since that time, I've really grown to know not only Suzanne, but her company. They are awesome, just awesome in terms of what they provide to the community, because they're great community partners as well. And so tonight's show, we're going to talk about taxes. We're going to talk about some of what has just come out. I mean, it's new, hot off the press in terms of exemptions and the like, and also Obamacare, the Affordable Care Act, and what that means to you who will be claiming and having to claim or whatever in terms of your health care coverage. So, Suzanne, I'm going to turn it over as much as I can to you so that you can partake of this great information that you have. And Suzanne, I will share with you too, because she goes out, like I said, she and her company are great community partners, but they actually go out into the community and they provide training and information on this information that we're going to share tonight. So if you are a group and you're interested in getting some information, however they do that, you can contact them and get with them, because they're happy to help educate the public on just what's coming up. So, Suzanne, what do we have to look forward to that's kind of hot off the press in terms of these exemptions? And maybe there's something you want to say as a lead into that as well.
Well, thank you, Gwen. First, I want to say congratulations, 8 years. And I'm sitting here thinking, this is probably my 4th or 5th year of doing this with you. And it's always interesting when I come in, because it's always about the same time of year. And it seems like we're always talking about what's hot off the press.
Yes.
Years ago, I've been doing this, I don't know, this is my 27th year with James Moore and Company. I told everybody I started when I was 5. And I don't remember 10 years ago it always being this kind of tenacious right at year end to know what was going to happen. So as we opened, my husband knew I was doing this show today, and he was reading the news journalist yesterday morning, and he was online looking at it, and he says, "Oh, there's a new tax law." And I said, okay, this is our breakfast conversation. I said, oh, yes, I saw that. So if anybody's seen the news, I mean, just yesterday, the House did pass a bill to extend some expiring provisions. So to give you a little history, a little background, is there are a lot of provisions in the tax law that have been renewed year after year after year. And a lot of them started back in about 2000. Some of them were referred to, if you remember, the Bush tax cuts, and that was kind of the frame, and they were like a 10-year program. And then since 2010, we've annually been going through this process. Do they get extended? Do they not? 2 years ago, it was New Year's, 2 days after New Year's, that they got approved being retroactive. I can remember this because, here I am, instead of watching football, reading the new past regulations, and I know I sound like a very exciting life, but when you know that people are going to be asking about it. So what happened yesterday? There's actually 55 key provisions in the tax law that expired at the end of 2013.
Whoa.
And they affect everybody from teachers to be able to get a deduction for minimum of $250 to many taxpayers that deduct real estate taxes and mortgage interest because there's a sales tax deduction that expired because we are a state that does not have income tax. So since we don't have income tax, to kind of level the playing field, the congressional members that came from states that didn't have income tax said, we need to be able to deduct something for our taxpayers. So they allowed you to deduct sales tax. So that expired at the end of 2013. There were also provisions, some tuition deductions that have been in place for last, I don't know how many years now, at least 10 years, that expired. So all these things that have become normal to most people, they expired at the end of 2013. And there had been no momentum for them to be renewed. Those are individual impacts. And then also there's business impacts, things like research and development tax credits. Being able to if you're a business and you're doing research, that there are tax benefits for being able to do that research and development. That had expired. Buying capital equipment, going out and investing in equipment. and being able to write it off as opposed to being able in 1 year.
Mm-hmm.
So a lot of times if you buy a piece of equipment, the IRS says, well, that equipment's going to last you more than 1 year. So you have to write off the cost of that equipment, get a deduction over anywhere from a 5 to 15 to 39-year life. So what it means is you don't have the cash because you bought the equipment and you don't get the tax deduction for it all in the same year. So there's just a whole myriad. There's about, like I said, 55 key provisions that we look at that are pretty common that expired at the end of 2013.
Mm-hmm.
We were hoping it would be before December, what is today? I don't know, the 6th, I think,
The
right?
4th.
The 4th, okay. It will be like the 12th, right? So they're in session until the 12th. That we were hoping to be before now, that they would have gotten extended because people can plan appropriately.
Mm-hmm.
They did not. They look like, so what was going on in Congress was really after the November elections with the upcoming change in control in the Senate, that there was some compromise now that said, okay, this is a pretty important topic, and so the proposal there was to extend, not to extend, but to make many of these tax provisions permanent, meaning the sales tax deduction would be there, period. It would take an act of Congress to get rid of the deduction versus a act of Congress to have the deduction every year.
Mm-hmm.
So the proposal was, let's bring some stability to this, because of the uncertainty of not knowing what's going to happen causes a lot of trouble. I mean, if you're an individual and your sales tax deduction may be saving you a couple $100s in taxes, you don't know, you may not even realize that, oh, this might cause you to owe money at the end of the year. Should you pay more money in this year? Are you going to get hit with a big tax bill at the end of the year? You're not even aware that all this is going on, and if you are, there's no clear answers. Because when my clients ask me, I say, my crystal ball broke. I have a magic 8 ball on my desk, and it doesn't work real well either. So not knowing causes people to be, one, they cause them to be conservative. Hopefully, they don't know, so they assume they're going to owe the money, so they set it aside. They don't reinvest it in their business, or so a lot of these. So the idea was to try to make some of these provisions, the research and development deduction credit's been there for years and years. Let's just go ahead and make it permanent. These things that have been there, and so that was what the original proposal was that we heard about. And both the House and the Senate had agreed to making the majority of these tax provisions permanent. And the president said he would veto that bill. And I had to go back to my civics lessons to learn, okay, what happens if the president vetoes? You have to have a 2/3 vote to overrule it. And I think everybody in Washington decided maybe that wasn't going to be the best thing for everybody to have the president veto a bill. So what happened yesterday was they came back pretty much with the same provisions, but only with a 1-year provision. Mm-hmm. So these are only in place if they pass it, and I believe the president at this point has said he will sign it. So these are only going to be for 2014. So it's not going to solve our uncertainty what happens for 2015. I'll probably be having the same conversation I'm having today in 2015. And so that's where we're at right now. Most people expect, I read all the blogs, and the people that are supposedly know way more than I am because I'm not in Washington, expect that this will pass. Mm-hmm. It had a pretty overwhelming support in the House, both sides of the aisle, and then in the Senate it will pass, and the president has already said that he'll sign it. So we do expect this to be law, hopefully before session ends, I think December 12th, which is important because the IRS said already that because of these changes being so late, it's going to delay filing season. Mm-hmm. So you won't be able to start filing your tax returns in mid-January like normal. It may be, I think last year it was the first week of February. Mm-hmm. So those people that know they're going to have refunds and they want to get they're the early birds, they get their W-2s and they want to go file, they're not going to be able to. It's going to be delayed again. I mean, they've already come out and said that. I think they had said if it didn't get changed before the end of before Thanksgiving break, that it was going to be delayed. So we know now that it will be delayed. So that's more uncertainty. I mean, it makes it difficult for people that may be looking for that refund. Mm-hmm. So it did get. So let's assume it's going to get passed. What does that mean? What that means is, at least for 2014, sales tax deductions education deductions, teachers' expenses, that those things will be in place. And this affects all income levels of taxpayers. So this is not, sometimes we hear, oh, this is just, for big business.
Yeah.
It's not just for big business. This affects a lot of people that maybe if they're deducting their mortgages, if you have a home, that you're paying a mortgage and you're paying real estate taxes, this is going to impact you. So, and the good news is for 14, it looks like it will be there. So people will maybe not know the difference now because what was there for 13 will now be there in 14, so they'll have consistency. So I won't have to do all the bad news to somebody when I say, oh, these deductions aren't there anymore. You're going to pay more in taxes. Hopefully will, if your income is the same as last year and your expenses are about the same, you should be close to being in the same position. So we don't expect we don't expect to see, with these deductions in place for 2014, we don't expect to see any increases in tax liabilities for 14 over 13. So that can give everybody a little, deep breath and hopefully make that a little bit better. Which, again, this is not law yet, but we expect it to be. Now, what's going to happen in 15? Some of us, some people will say, oh, if I have a bonus, do I want to take it in 2014 or 15? The general rule, push it off as long as you can. Holding your money for another year is better. Will these provisions be renewed for 15? Who knows? That's a big question mark. So that does cause a little bit of angst to say, normally I would always say push off until 2015. I think I still say, push it off. I don't think with the change now with the Senate and the House from the elections, we don't anticipate that rates are going to go up for 2015. I would be really surprised that anybody wants to have rates going up. The economy is stabilized. It seems gross national product is up. We're getting right now gas prices are down and things like that. So I think as long as we don't, I think from the stability standpoint, I don't think anybody wants to rock that boat in Washington and have rates go up. So I think we're probably fairly safe. But again, this is a big what if. What we're trying to deal right now with is what do you do for 14, and then how do you plan for 15? So I think we'll see some. We're not anticipating rates going up. So for our clients that we're talking to, we're saying, if you can push off income into 2015, go ahead and do that. If you can take expenses in 2014, might make sense to do that. For businesses, it's kind of late. I mean, if you're already in December and you need to make a major purchase, it's almost too late to do it. If you don't have it in place already to do it, you're not going to be able to make that major purchase in a matter of 3 weeks, especially with the holidays. But if you were waiting to wonder, oh, am I going to be able to write off that asset, that piece of equipment if I go buy it? We won't know until the president signs it, but most likely, yes, you're going to be able to write it off. I haven't seen the details of what they're looking at yet exactly on increased write-offs for businesses, but we anticipate that they'll probably be similar to prior years where you can write off up to $500,000 worth of fixed assets and 50% of it in 1 year if you don't have a certain criteria. So that's from a good standpoint. I think that will help our businesses, help our all these having these tax cuts will help a lot of your listeners be able to keep their tax bill at least maybe the same as last year. We're not seeing any new incentives come out. There's no new benefits, no home buyer credits that we've seen in the past, or any type of credit. Nothing new. All we're really looking at is keeping stability. What's already in place is from an income tax standpoint.
Okay. Now, the other question and concern that so many have has to do with the Affordable Care Act, and affectionately known as Obamacare. And, a lot of that's still just as uncertain.
It's very uncertain. Unfortunately, I was showing you before we got on the air the forms that we have out now. I think I have probably 6 new IRS tax forms, and they all have written draft. We don't have any final forms yet for 2014 filing. So what do we do now? We do know that if you got your insurance from the exchange, you're going to get now a new form from the IRS. It's a 1095A. You're going to get that. We know, so you're going to get what you normally at year end when you get a tax form like your W-2 or your mortgage interest statement. You're going to get a new form that's going to talk about your health care. There's like 3 new forms out. There are a 1095 series of forms. If you got insurance from your employer, you're going to get a form. If you got insurance from the exchange, you're going to get a form. So there's, I think there's one more form. There's 3. I know there's 3 of them. I can't remember what the 3rd one is now. So you're going to get these forms. So everybody's going to get them in the mail and go, what do I do now? Because this isn't something that it's brand new. The forms are still in draft. That makes all your insurance companies are going to have to fill out these forms and send them to every insured person in the country is going to end up getting some type of insurance form, which is new. More paperwork, so we got to figure out, and then you're going to get them and go, what do I do with it now? Well, now that I have this form, and generally, if we talk about let's talk about if you got your insurance from the exchange. Okay, generally, if you got your insurance from the exchange, what you were able to do was if you would put in your projected income, or you put in your 2013 income, and it would calculate a premium credit. So if your insurance was going to cost $1,000 a month, and because of your income level you got a 60% credit, you only paid $400 a month for your insurance. So you would actually pay $400 a month, and you got a credit for $600 a month. So that was based on your, most likely, it would ask you either what was your 2013 income, what do you expect your 2014 income to be. So that sounds great. So now you're at the end of the year, you have this form that says, here's what I got from the exchange, this is my premium, this is the credit I got, and this is what I paid for my health care. Now you need to take that to your personal tax return. And now you need to fill out a personal tax return form that's based on your household income, actual. What did you actually make? In effect, recalculate your premium credit. So maybe you do that, and maybe your income was down. I'm going to be positive. Well, it's not positive from the fact that your income was down from 13. So maybe you should have gotten more of a premium credit. Income being down is not necessarily a good thing, but in a situation that your premium credit would change. So you go through the calculation on your form, and you find out, oh, I should have gotten a 70% credit. So you'll get another $100 a month back on your IRS tax form, your IRS filing. Well, that doesn't sound bad, other than the fact that your income was down, not necessarily a good thing. But let's say your income was up. Let's say you had a great year and your employer gave you a bonus. So now your income is higher. So now you have to recalculate your premium credit. Your credit, instead of maybe being 60% on $1,000, maybe now it's only 50%. So now you owe $100 a month more back to the IRS to go towards this credit that you should have not gotten. So that is a big difference. I'm really, really concerned for those people that got premium credits, because that could be my simple example, that's $1,200. That's a big difference. That's a big swing on your tax bill. And as a tax professional, if I have to meet with people and say, this isn't income tax, but basically you're paying your health insurance now on your tax return, because it's a difference in what your credit was versus what it should have been. And that can swing dramatically, especially for somebody maybe that was unemployed and then became employed. And they think they're doing fine because they got the premium credit. They went on the exchange, they typed in all the information, they said, oh, this is your credit, and this is what you're paying, and you get your insurance, and you're happy. And all of a sudden, the end of the year comes along, and you get this form from the IRS. You plug it, you either do your own tax return if you can figure out that lovely form I showed you with, your eyes rolled back when I looked at it, and you shook your head, and it's 2 pages long, and it's by month and premiums. It's not an easy form. And if you're able to figure that out yourself, or you take it to your tax professional, and they figure it out, and they come back to you and say, well, you didn't owe any income taxes, but you owe premium taxes. You have to return your premium credit. You have to give back money because now you're working and your income is higher. So it's going to be very interesting to see how the exchange piece flushes out with this filing season. I'm nervous for people that One, you got people that maybe didn't need to file tax returns before. They're going to have to deal with it if they got this premium credit. People get forms. I can't tell you how many of them are probably just going to file that form right in that circular file that we know that's underneath our desk, called the garbage, right? And then what's going to happen in 2 and 3 years when the IRS starts matching up all these people that got forms from the exchange for their health care premiums and never filed tax returns? I can just see the flurry of notices that are going to come out. And it's really, for your listeners, is those that may not be using a tax professional. Excuse me, because hopefully, as a tax professional, we're asking questions. Where did you get your insurance from? And we have in our firm, we have a whole separate sheet now just specifically to address insurance premiums. Where did you get your health insurance from? What was your premium? Do you get, where are these forms? So that we can ask the questions and make sure that we're doing the right thing for the client. Now, unfortunately, this is an added cost to preparing your return. Our costs are going to go up. This is going to be it's a whole nother section on the tax return that we didn't have to deal with before. And clients they're not going to be happy. Nobody's going to be happy. Anybody that's going to have somebody prepare their return, and now you have to deal with this whole other reporting system. It's not income tax. It's really just related to your health insurance, your health care. So, some people may be happily surprised because they're going to get more premium credit and they'll be satisfied. Other people are not going to be because they're going to be surprised when they go through this calculation. I just have no idea on how it's going to come out. And I think it really depends on those, how many people got insurance from the exchange and what their income levels were. So if you're, one of the listeners out there and you've got your health insurance from the exchange, please really pay attention to it, read about it, make sure you're looking at that form now you have to file with your tax return to calculate your premium credit or not. Now, those are people that went to the exchange. So what about the people that didn't go to the exchange? Well, there's 2 other issues there. One of them is whether or not they had appropriate coverage. Did they have health insurance coverage? Right now, the penalty for employers not providing coverage isn't in place for 2014. That kicks in for 15 if you have more than 50 employees. So one of the other forms you're going to get is from your insurance company that says you had coverage, whether it met minimum coverage, and that's so you can figure out whether or not you're subject to a penalty. So the other calculation you have to go through is, okay, if I got health insurance, does my form say I got the appropriate health insurance? And I can tell you for the most part, I think those people that did have health, that was the third form. One of them comes from your insurance company. I think one of them comes from your employer that says whether they provided you insurance. So I think that most people that got insurance I think they're going to meet the minimum requirements. From my experience of talking to clients, employers, and individuals that got insurance. So hopefully, if you had health insurance, you're going, oh, thank goodness, I might not have to deal with this year. If you didn't have health insurance, now you have to figure out whether you're subject to the penalty or not. And unfortunately, a lot of people just heard $95. Well, it's not just $95. It's $95 or 1% of your income, whichever is greater. So now you're going to get, you have to go through this calculation on your form to figure out what was your income. And it's your household income, so it isn't necessarily the income that is on your tax return, because it could be your children's income because they're part of your household. Theoretically, it's maybe a partner that's living in your household, their income too. So there's a lot of question about what's household income. I'm not really sure yet. We're all still trying to get interpretations on this, and then that's where you're going to have to go through. And did you have coverage for part of the year? Not part of the year, what was your coverage, and that's where you're going to go through and calculate the penalty for not having health insurance if you did not have health insurance. So I think the people that got the insurance from the exchange are going to be surprised that they have to really deal with this on their taxes, because I don't think they would have. I didn't expect it, and I follow this stuff. I did, I guess I should have known. Well, yeah, that's how they're going to get their premium credit back or not. I thought it would be, but it's going to be on their taxes. And when we started looking at this stuff back in July, like, oh my goodness, this is serious. This is a lot of different. People aren't going to be surprised by this. I think the people that didn't have health insurance aren't going to be surprised because they knew there's going to be a penalty, and they may be surprised at the amount, because of the 1% number.
Mm-hmm.
So that's going to be another calculation that they're going to have to go through. So it is it's going to be a challenge. I think it's going to be very challenging this year for filings.
And you mentioned that those who decide they do want to pay the penalty and not get the health insurance, there is a form that they use for that.
Yes,
as well.
There's a form for that. It's going to be sort of an app for
Right,
that.
yeah.
There's now going to be there's a form for that.
Right.
This is going to be my life.
And so that people understand too, you said those that are unemployed, then there's an income category, there's an income level that you'd have to reach to be required to have the insurance. And those that are on Medicare, they have insurance through that. So
Yes.
all of this is different. Each category, whatever, is
Yeah,
different.
you really have to look at your individual situation, and what may happen is maybe you're unemployed, but then you get a job, and so your income changes.
Mm-hmm.
So that's going to impact you. A lot of business owners, what I'm concerned about for business owners is their income is up and down. I mean, they don't know what their income's going to be, and so they may think, oh yeah, I'm going to have income. Or I'm not, my business isn't doing so well this year, and then they have a really strong ending year.
Mm-hmm.
And so they may be either subject to a penalty or a premium, from the exchange, a premium credit, or, all of those factors. I mean, the other thing that's unfortunate right now, and I was explaining to you earlier, as our firm, we have more than 150 employees, so we provide insurance to our employees. And we were looking at anywhere between just call it 30% to 60% rate increase on the health insurance, our premiums. And I think generally across the board, people that I've talked to, individual policies, business policies are seeing those type of rate increases. And so what are people having to do? They're having to reduce coverage, change coverage, have employees pay more portions of it. The uncertainty when you're in the insurance business, you're actually actuary, great crystal ball. I'm not sure how those work, but so when they have uncertainty, when they don't really know what it's going to cost them to cover claims, what do? They respond by increasing premiums,
Mm-hmm.
and we are seeing tremendous premium increases. I mean, when you're talking, a 50% increase in your premiums. Your insurance premiums, that's significant. I mean, it's a hardship on individuals, it's a hardship on businesses, and I don't think that's going to stabilize for a couple of years until this flushes out and people really understand what the impact is to the insurance companies, to the medical system itself of the new Healthcare Act.
Mm-hmm.
So we're seeing that. We're definitely seeing that uncertainty come through. So if you do have insurance, be prepared, I hope I set you up to be, optimistically pleased when your premium increase only comes in at 25%. It's pretty bad. We're seeing it. I don't know what you've experienced, but I'm definitely seeing it with people, and they're saying, what can we do about it to see this?
So you've stated a little bit of what you've advised your business clients, individuals. What should people, as they're starting to, some of this is starting to sink in, what should they do in preparation for their tax preparation?
Well, even like you said, knowledge is power. Getting educated, understanding what kind of, there's a lot of resources out there about what kind of information they need. It's not the easiest to read, but really, if you're in that situation, getting as much information you can beforehand. What I look at is go back and see if you can figure out what your income, if you're on the exchange, find out what you used as your income level. Did it change dramatically from the prior year? Because if it did, if it went up, if your income went up from the prior year, if you put into the exchange your 2013 numbers, and you can look at your W-2, you can look at kind of your other income if you're a business, if you're an individual, whatever your income is. What could really be detrimental is, let's say you sell an asset. Let's say you have a rental property or something and you sell it. Now you have a gain. Your income's going to jump up that year. So what does that mean? That's the questions I don't know the answers to yet. I just haven't seen it, go through yet. And so be prepared. You can prepare yourself a little bit by maybe looking at what your income was in 13 versus what it's going to be in 14 to say, oh, I might have an issue here. And then at least, and I don't know, maybe you can go back in and recalculate what your credit was going to be and at least prepare yourself that I could be looking at and it's not, I hate to call it a tax bill because it's not a tax bill, it's just a collection mechanism.
Mm-hmm.
You know, your tax return is just a collection mechanism. It's a way to be able to collect the money or give you the money that you were supposed to get on your premium, on your insurance premiums. So, I mean, that's my, you know, stance. I'm gonna have to say, you know, don't shoot the messenger here. It's nothing that, you know, it's related to your income taxes. It's truly related to this insurance premium, you know, these premium credits coming in and out of your filing on your tax return. So I think, you know, getting educated about that. I mean, you have to get some ideas, knowing, you know, whether or not you are going to be subject to a penalty or not. I think that's, you know, and I think most people there kind of know, but think about what the penalty might be to prepare yourself that you are going to have to pay that, and, you know, maybe you really think about, well, then I need to get some coverage.
Yeah, and what you mentioned about household income, that not being that clearly defined, but just the best thing people can do is really deal with the worst case scenario, that it does include everyone
In your household.
And then look, yes.
Yeah. I think household income is going to give people a lot of trouble, just from my reading of it, because of you know, we're struggling with it. How are we going to figure out what our household income is, or our clients? Because what if they have an elderly parent there? Do we include their income? You know, do we include their Social Security benefits? You know, what if they've got retirement income? I think we do. You know, if that's part of your household. But I'm not sure. You know, we don't really have a complete definition, or we haven't been able to. The rules are so new; they're being interpreted every day. The forms aren't even final. The instructions aren't final. None of this is finalized yet. And even once they finalize it, we're going to get interpretations all year long on it.
Absolutely.
So be prepared, and it's a difficult situation for us as a professional to tell clients, and we just don't know yet. We don't. You know, there's all sorts of conflicts in the law already that we don't know how to answer.
And then so many people are still, it's up in the air about everything being in flux, but also even in terms of the Supreme Court making their decision about the exchanges.
Yeah, we're waiting to hear on the Supreme Court. I mean, from the way I understand it, is they're looking to see whether or not it was legal for the federal exchange to give a credit back to a state, so a participant in a state, towards their health insurance. And so if that gets thrown out, I don't know what happens then. If they say, oh, you know, they're not really going to get the premium credits back from all those individuals, I don't think so. You know, I think it was 36 states. I think it was something like 36 states that did not put in a state exchange. So that's going to be significant if they rule. And I have no idea. I'm going to have to follow. I don't know where they are on that Supreme Court ruling, but that's going to be something we're going to have to watch too, to see how that comes back through. And you know, I try to bring this down to practical. What does this mean to you?
Yes.
What does it mean to you, your listeners? You know, what do they need to be aware of to make sure that, you know, they, like, not knowing, okay, these premium credits or these penalties, or I'm going to get all these forms in the mail. What do I do with them? Don't throw them out, please. You know, you really need to you need to look at them and try to make sense of it. Ask them something, you know, get some professional advice. You know, unfortunately, from our standpoint as a preparer, as an advisor, this is going to cost taxpayers money. I mean, our advice, their penalties, it's a whole nother structure of compliance reporting system. And you know, we're kind of on the unfortunate side of having to tell people the bearer of the bad news, from the standpoint that this is new, it's different, and it's going to take a couple of years for it to settle out, and then maybe they may change. You know, we don't know. You know what? They admit it. Nobody really knows how this is all going to come out. They may find that, you know, there's some unintended consequences. And tweak it. I'm sure it's already been tweaked. I mean, how many amendments and changes? You know, there's hundreds of them that have already been done. So I would anticipate more.
And truthfully, this is typical of any new law, especially something that deals with something as complicated as healthcare, that you would have truly changes, and you would have you would be working through the system. You'd end up tweaking. You'd end up doing those things that are necessary to make sense of it, but also to make it make sense and workable. So as you said, over the next year to 2 years, we're going to see a lot of things changing and working their way through. and not just tweaking. There may be major changes that come about as a result of this. And one of the things you and I had talked about too is the fact that there are people out there too who are kind of caught between because our state is one of those that did not expand the Medicaid levels. So as a result, you've got some working poor out there who may end up then not having to be penalized because they don't yet meet that magic income level by which they would have to then either apply or receive and obtain that insurance.
Yeah, I was.
Let me say real quick, this is WLE 1380 AM on the radio dial in Ormond Beach, Florida. This is Truth with Gwen Azama-Edwards. My guest, of course, is Suzanne Forbes, CPA with James Moore and Company, and we're talking about your taxes, and we're talking about the Affordable Care Act and its impact on you as an individual and as a business. So, WLE 1380 AM on your radio dial in Ormond Beach, Florida. So I'm sorry, what were you?
I was going to say, I was actually surprised. I did not realize that to go to the exchange you had to have a certain income level. I thought anybody could go to the exchange, and so the exchanges were built assuming that there was the Medicaid coverage, that expanded coverage. So the way I understand it is there's like you said, a group of people, the working poor, that their income levels are so low that they don't qualify to go to the exchange because their income is too low. But they don't qualify for the Medicaid because it wasn't expanded.
Right.
And from an income, from a tax filing standpoint, they're not going to be impacted because they won't be penalized. The problem is they defeated the system. What the system was designed to try to do was to insure those people, and now they're not insured.
Right.
So we're not covering their risk for them to be insured one way or the other. Will they correct that with the exchanges, in the future? I don't know. I mean, the exchanges were built. I mean, I don't understand the architecture completely of the exchanges to figure out how they would be changed to meet that need for some states versus others that expanded the Medicaid program.
So all in all, we're looking at I said quite a mess, but
it's a challenge.
We're looking at a challenge, which is it's an opportunity. There was an opportunity to try to get something right, and unfortunately, as with so many things where politics gets into it, it ends up being a mess, unfortunately. And your experience, you and I were talking in terms of those who have received insurance through the Affordable Care Act, the exchanges and the like, and some of the ones that I've talked to are happy because prior to this, they were paying like thousands a month, and now they're paying hundreds. So for people like that, they're happy, and they said they not only have the coverage that they had, that they've got even better. But there are others who said, they had such a high deductible that they weren't able to actually access and utilize the insurance. They had insurance, but the deductible was thousands of dollars, and they had to pay that out before they could actually utilize it. Or the services that were available through the insurance carrier that they decided they would go with, the services they felt were so poor that it's like useless. And I know I've had other guests on who've said that there are other now there's competition out there. There are others who will be providing the insurance, so that for those where the rates are going up, they suggested they shop around, because there may be others who will provide that same level of service or more at a cheaper rate based on the competition that's there. So people do need to definitely shop around. But they, as you've said, they've got to get ready for this next round, and this next round is the paperwork, all the documentation that they will end up having to complete as a result of signing up. And I know at the same time we're involved in other people deciding whether or not they're going to sign up, because this is the open period for them signing up for the Affordable Care Act for this part of it. Because there are other parts of it that people sometimes lose sight of, and that's, for me, who's on Medicare, so I have my health care taken care of, But, you know, there's so many things that I used to have to pay for that's now I go in and I get it free because it's preventive care. There are other types of things that we used to pay for that we don't have to. So there are other parts. There are a lot of parts of the Affordable Care Act, not just this part in terms of the exchanges and the like, that we need to check out. So as you stated, they've already started working on some glitches. I'm sure there are others they will do. There are other changes that they will make. But it's still important that as many people as can be are covered under insurance. And as you stated, your concern is really about a lot of people who in the past have completed their own
Absolutely.
tax forms.
And they're going to be so
Oh
surprised.
goodness, I tell you, I come up with all of the information and then I pass it off to my CPA son. But for those who are doing their own thing, and just know that there's another level of documentation that's required now. And you need to really and truly look hard at that. And as you said, don't throw anything away. You know, the first thought of people who are, you know, they get a little concerned about, you know, what is this? I'm sure it doesn't apply to me. And guess what? Yes, it does. Oh, goodness gracious. Your crystal ball, you said, is broken, but 2 years down the road, we're probably going to look back on this and say, why didn't they do this? Why didn't they do that? In fact, people are saying that now. But somewhere along the way, hopefully there are organizations that you belong to, that other CPAs are a part of, that are providing some feedback and input into all of this that can help make the system work a little better for people. Is there that kind of a...
Oh yeah, well, from the compliance standpoint, from the IRS, I mean, we have national associations, the AICPA, which is our National Association for CPAs, and they are constantly talking with the higher up, and at Congress and at the IRS to help them figure out how to, some of the issues. And we're constantly having communication with them. Can you give us this interpretation? Because most of it is, and I think I've stated before, there was 2,000 pages or something like that, and typically. And when a tax law is written, 1 page of tax law generates 100 pages of regulations. So you have the law, and then you have the regulations to interpret it.
Right.
So, just multiply that. So typically the rule of thumb is about 1 page of new law will generate 100 pages of regulation. So,
2,000 pages.
Yeah, so 200,000 pages of regulations, and that's exactly what's happening. And I do think it's, if you can get back to the root of it and say, what the purpose is, if we can get more people on preventative maintenance, more people covered to go to the doctors and not use our emergency rooms and stay healthier and all. I mean, I've talked to the folks at both of the hospitals in our community, and everybody is focused on trying to keep people healthier. If we can focus on, and theoretically, that insurance premium cost will go down in the future. Right now, it's not going down. It's going up because of the uncertainty. Nobody really knows. It's funny because I have talked to some, there's a few people around still that remember when they implemented the Social Security Act. And that was earth-shattering, and that was going to be the end of the world. Yeah. So, I try to relate it back to, well, what happened there, and I mean, how many years, and how did they tweak that system, the Social Security system, and the Medicare system, and all those things. I mean, some people may think that it's a good system now, or it's broken. It depends on where you come from, as to. But it did a lot of good for a lot of people that are getting Medicare or health or some type of retirement benefits or something they wouldn't otherwise have gotten. I think if they realized what they paid for it, it might be a little different thing. I mean, when you realize right now you're paying 15.3% of your income, your paycheck goes towards Social Security and Medicare. That's a big number, and I think if people put that money away, they would have actually had some retirement. So it was forced saving. It was government forced savings, and for many people they needed that. Because where would we be if we didn't have that? So you could debate that all day long, and maybe we'll come out with that in the end in a couple of years related to the health insurance, and it will be refined, and maybe we pick up the good pieces of the system and keep them and revise the pieces that may not be working. And I with any new major change, I believe that. I think you try to keep focusing on what the objective was.
Right, right.
And it is, not was, it still is the same objective to be able to provide, people to get health coverage, to be able to do preventative care and be healthier. And I know as a community we're trying to do that too. It will be easier, but meanwhile I think we're in for a little bit of pain.
Yes, yes.
There's going to be some uncomfortableness here over the next couple of years related to this topic for sure.
I heard something over, not the news, but on TV watching in terms of what other countries are doing, and everything's relative. But as you look at and listen to what they're doing in other countries, what parts of their paychecks are going toward, because some people in other countries, you're talking 25%, if not more, that goes toward something like a Social Security type of a system, and how much more goes towards some kind of a healthcare system as well. In our country, we're not used to doing certain things, but for some of the other developed countries, they are. So it's a matter of us getting used to accepting the accountability and the responsibility that goes along with healthcare, but also the accountability and responsibility that goes along with working and with the type of income taxes that we deal with as well. And do you hear of any, because we're hearing more and more about proposed changes to our tax system and the fact that too is broken and needs to be fixed. Do you hear from the organizations you're a part of that there's any progress coming forward in terms of changes to how we're taxed and how we pay our taxes and the like?
Nothing of any great momentum. I mean, we can talk about the flat tax, and that's my friends and family and people. They come up to me, oh, you're going to be out of business if there's a flat tax. And I said, it's not the tax rate. I can calculate the tax rate. That part's pretty easy. The issue with the tax system is define income for me. So I don't care if it's 10% tax. Define income. Is it going to be, is it gross receipts? What kind of expenses are you going to take? Is it, when is it income? Are you going to say when it's cash, when it hits the bank? Well, what if it's a loan? I mean, is that cash? And so I tell people it's not the tax rates that's the problem. I mean, once I figure out what taxable income is, I can do the math to apply the tax rates. The issue is what is defined as income. And that really is, if you sell your house, does that mean if you have a house for, is that is the gross sales price of your house going to be defined as income? And that's what you're going to pay your flat tax on? Or is it going to be after certain expenses? And so it's about, to me, it's not about, the tax rates make a difference because even in this country, I do have to say, even right now where our maximum tax rate with the new healthcare tax involved, I mean, we're still like right around a little over 40%, 40.8 I think it is. And there are countries that it's 70%. So, I mean, 40% is high. What happens is you get to that tipping point when you get a high enough tax rate, and I a client from Canada, and he had said his rates had gotten, the tax rates had gotten so high they get disincentivized. Why do I work this hard? If I'm going to give more than half of my paycheck to the government, why am I going to work this hard? Why am I going to risk everything I have? I mean, signing personal lines for businesses, or going out and that whole entrepreneurial spirit, you lose it. People aren't going to do it. They're not going to take the risk. And
you find more under the table type
you get a different society. You get under the table, where nobody's going to, a whole underground society, a barter society, and then what happens to your system? It falls apart because, most people are like, well, most of my clients, they say, I'm willing to pay my fair share. I mean, so what's fair?
Fair, yeah.
I mean, they say, I don't want to pay any more than I have to, but I understand that it costs something to live in this country. Most people accept that. They understand that they've had the joys and the ability to be in a country where they can have a good job, make a decision on what they want to do with their jobs, or what they want to do with their careers, or get education, or get health care. They at least are here. So that's not been an issue. More the issue becomes what's fair. When is it become where it's too much? And what worries me is over the last year or two, I have a lot of clients that say, it's just not worth it to me anymore. It's not worth me risking what I have or what I'm going to do to be able to do this. you look at, Bill Gates, I mean, we can just talk, I mean, the man's, but think about the years and years and years that he worked out of his garage, and what he risked, and so that's where we're going to get into a problem where, when we look at tax rates, because we still do, we're starting to get up there now with some of, that's why you read about this offshore stuff going on and everything, because our rate structure, when we're getting up into a max rate, it used to be 28%, and now we're at 40%. So we've creeped up 12% at our maximum tax rate. And, capital gains used to be a maximum of, 15%, now it's up to 23.8. So we're starting to see some creep on that tax rate. And, I do examples for individuals, maybe, and this isn't the rich, this is somebody making $50,000 a year, and I show what happens if you make $50,000 between 2 years, or $100,000 in 1 year and zero in the next year. And what you pay is double to the IRS.
Oh, wow.
By making it all in 1 year. I mean, I do a simple example. I use an example making $250 first, because everybody's like, okay, let's use $250,000 a year as an example. And everybody's like, yeah, well, I want to make $500,000 in 2 years. I'll pay it. I said, okay, let's do that. And then I go back and I say, all right, this is great for 200. And I said, let's do it if you make 50,000, and let me show you what the difference is. And that's when everybody's eyes open up, and I go, oh, okay, now I understand. Now, most people don't have the ability to say, okay, I'm going to make it all in 1 year or not, but when people, get into situations that they happen to have an asset that they can sell where it spikes up in 1 year, that's the tax rate issue. That's the, but come back to your question, do I think there's really going to be any serious reform? I don't think so. I think politics are just too involved. I just don't see it happening. I think that we can't even extend some provisions that help all Americans for more than 1 year. Do I really think that there's going to be enough momentum to be able to do overhaul to the system? No. I mean, I can tell you, I've been practicing, for long enough now. It's not gotten any easier. It's gotten more complicated. It's not. I started practicing before the Tax Reform Act of '86, and I remember, everything since then has gotten more and more complicated, definitions and how we're trying to understand things. So I don't think it's going to get a major reform. I just don't see it happening.
It's like the law. There are people who talk about the laws and criminals, but laws are set up not necessarily to stop crime, but to allow and let the people who are not criminals know what they should not be doing. Right. So laws are for the innocents. They aren't really for the criminals, because the criminals are going to find a way.
That's right.
They'll find a way to commit a crime.
Yeah.
And it's the same thing with the taxes. They get so complicated because there are people who find loopholes, and we try to come up with a way to get over that loophole and this and that and the other and that crack and all that. And so it gets overly complicated because you're trying to keep the good people who are doing what they should be doing it, and try to catch hopefully some of the others who are doing the things that really cost us. Unfortunately, we all end up paying for those who don't do it as they should be doing it. All in all, you're right. It has become much more complicated. My hat's off to you, your company, and others who are in the business. And to our listeners, if you used to do your own taxes, at least this first go around, you need to go to somebody else so you can learn through that process of finding out what it is that you need to do, knowing that it's going to change next year and the year after, whatever. But at least you'll have a good handle on it. And what you don't want to do is end up getting yourself messed up with the IRS, because once you do, they start looking at you, don't you? Start looking at you much more closely.
Yeah, it's just that unfortunately when you get in a hole, it's just very difficult to get out. The IRS does not want you to borrow money from them, and it's a very steep penalties, and so it's just not a pleasant experience. And so, I work with a lot of the IRS agents. They're good people. They're just doing their job.
Yeah, they got a job to do.
Yeah, and it's a difficult job, and we have a good relationship with them because they know our firm, they know the quality of our work. They know when they come in, we're not gonna sit there and give them a pile of crap. They know that. Okay, you're going to be able to explain what you did. You're going to be able to, now if the client gives me information that's not good, there's nothing I can do. I mean, I don't audit. When a client brings us information, they don't have to bring me every receipt in. I expect that they know what they spend for certain things, and And so, you know, when if we get into an audit situation, then they have to provide the receipts and, and invoices and things like that. But, you know, we can look at things too and see whether it's reasonable. Does this make sense to me that, you know, well, wait a minute, you know, how could you pay that? You know, your expenses, how did you live? And you know, I mean, there are just certain things there that you have to consider. And so, you know, you have to, you know, it's a big picture, you know. You know, you need to pay your fair share, no more than that, and you want to make sure that you take advantage of every legitimate deduction that you have. There's absolutely nothing wrong with that, but a lot of this is just people being educated and understanding. We have a new client today, and you're just going through all the things that they did not know, that nobody had ever told them to be aware of this, think about this situation. So it is definitely an education process.
And that's the key to going to a company such as yours, where it's like going to a doctor who never tells you what your problems are. They just give you right out a prescription and say, go get this. You're wondering, well, why am I, you know, going to someone who would take the time to educate you as to the what's and the whys, so you understand really what's going on and why you do this and don't do that type of a situation. So companies like yours are really and truly, I wish more were like you. I'm sure there are a lot of good accountants out there, but I'm just saying that you guys are great. I know you're good.
Thank you.
And not only in terms of that, but as I've said, you're good, great community partners too. And I'm so grateful to you for coming on and sharing and providing some insights in terms of some of what we can look forward to in terms of our taxes for next year, as well as what people can look forward to in terms of health care as well. And we're not just going to keep our fingers crossed. We're just going to keep plugging away here and not only hoping but knowing that things will get better. Because, you know, it's kind of part of the process. It's part of the process. So thank you so much, Suzanne. Appreciate you and your company so very, very much. All right, guys. Hey, we've come to the end of the program. Remember to join us at least for the next 2 Thursdays. We've got that we're coming. I have guests that will be coming on, and we're going to discuss issues to inform and empower you. Go to the website www.gwen-truth.com. In case you missed any part of this show and you want to hear more of it, it will be put on YouTube. You can get to it by going to the website www.gwen-truth.com. So until next time, be informed, be empowered, and stand tall for that which is right and truthful. Again, this is Truth with Gwen Azama-Edwards. My guest again, Suzanne Forbes, CPA, James Moore and Company. And hey guys, just know that things will get better eventually. You just stay blessed.
Truth with your host, Gwen Azama-Edwards, exclusively every Thursday night on